Okay, so we're going to wrap this lecture up with how to calculate cash flows from investing and financing activities. So cash flows from investing activities are a three-stage process to determine cash flow. So how do we determine it? Again, we can go into this three-step process, but what I care most about is if it's a long-term asset, then likely it's going to be an investing activity 99% of the time. There's some long-term assets that don't fall in this bucket, but you won't be tested on them in this class. What we need to do as accountants is we need to identify changes in investing related accounts, explain the changes, and then find changes that relate to the increase or decrease in cash, and then report their cash flow effect. What we're really going to be focused on, right, it's always the changes, so the increase and decrease in each account. So plant assets, in this example, went up $40,000, and accumulated depreciation went up $12,000. So this is the analysis. This is step one, identifying the changes. So in the analysis revealed the $40,000 increase in plant assets and a $12,000 increase in accumulated depreciation. And then let's identify how that relates to cash. So we'll dig into the underlying journal entries here, and we realize that $60,000 of the plant assets were purchased with notes. In this situation, there's no cash flow related to this matter, right? And then item C, we find out also reports that we sold plant assets, which resulted in a loss, right? So this balance sheet information, this difference, can contain a lot of other complex information. It can include notes payable. It can include gains and losses, and then the depreciation expense. So we need to identify these changes, explain from a reconstructed analysis, and then report their cash flow. I am not going to test on some of these more complex factors. What I will require you to know, though, is that these factors exist, right? So I'm not going to ask you to reconstruct plant asset change on your final exam. You might have some on your homework so you can understand the concept better, which I encourage you to work on and practice and try to get. But I want you to all know that something like a plant asset is not just necessarily a decrease in cash for investing activities. Just because it went from 210 to 250 and increased by $40,000 over the year doesn't necessarily mean that the plant assets that we paid cash for that. Some of it could have been through notes, and then we could have sold some of the assets as well. And so we find in here, right, this $60,000 increase actually came from, the $40,000 increase actually came from a $60,000 increase in notes payable, and then us selling $20,000 of the plant assets. And so actually none of that would be cash except for this cash receipt of the $2,000. So it's important that we look at the underlying information, and I'll expect you to know that can occur and to use your reasoning through each of these transactions, but I won't expect you to do the cash flow itself related to them. What I will expect is that if this is increasing or decreasing, that you will know that it's a cash inflow or outflow.